Investors who want to earn regular income often lean on dividend stocks. Well, investing in dividend ETFs can make things easier for you. It not only allows you to earn regular income, but also offers instant diversification without the trouble of handpicking individual dividend stocks. A dividend ETF usually contains dozens, if not hundreds, of dividend stocks. So when you invest in a dividend ETF, you're basically investing in a number of dividend stocks, which means there are higher chances of steady dividend income. If you want to earn passive income by investing in ETFs, you need to watch this video until the end. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about some of the best dividend paying ETFs out there. However, before we go any further, make sure to hit that like and subscribe button. Now without further ado, let's get into this. First of all, we have SPHD, which is an ETF that pursues high yield first and low volatility second. This dividend ETF will offer you exposure to a basket of 50 high-yielding and low-volatility stocks in one click. And the best part is that the expense ratio is just 0.3%. According to a report published by Seeking Alpha on July 9th of this year, SPHD sports a 30-day SEC yield of 4.1% and a trailing 12-month yield of 3.9%. That is roughly 3 times higher than the yield of the S&P 500. Moreover, SPHD's TTM price-earnings ratio currently sits at 15, and its forward price-earnings ratio is 13.4. That sounds quite cheap, especially compared to SPY's 27.3 TTM price-earnings ratio and 22.6 forward price-earnings ratio. The price of SPHD shares at the moment of making this video was $42.95 with a 52-week range of $31.77 to $46.49. It offers a yield of 3.86% and a YTD daily total return of 21.18%. Moreover, SPHD pays a monthly dividend, however, the payout may fluctuate from month to month. Reports suggest that the dividend payout of SPHD has constantly grown over time. In fact, the annual dividend of SPHD has grown at an 11% average pace during the 7 years from 2013 to 2020. It is important to note that SPHD invests 90% of its assets in the common stocks of companies listed in the S&P 500 Low Volatility High Dividend Index. This fund is concentrated in consumer defense and utilities, and some of the major holdings include Iron Mountain Incorporated, Altria Group Incorporated, ExxonMobil Corporation, and AT&T Incorporated. Next on our list is the Schwab US Dividend Equity ETF, which crafts a modified market cap weighted portfolio of fundamentally sound dividend-oriented stocks. SCHD was launched back in the year 2011, and it is an extremely popular dividend ETF. According to a report published by Morningstar on April 19, 2021, this fund tracks the Dow Jones US Dividend 100 Index, which sweeps in 100 stocks that have paid dividends for at least 10 consecutive years and boasts the financial health to bolster their chances to continuing their streak. Many of the top holdings are reliable industry cornerstones like Coca-Cola and 3M. Stocks in the portfolio tend to come with relatively modest valuations because the index considers yield when selecting constituents. The share price of this dividend ETF at the moment of making this video was $74.93, and the YTD daily total return is 22.97%. On the other hand, the expense ratio is just 0.06%. This index is designed to measure the stock performance of high dividend yielding US companies with a record of consistently paying dividends. Moreover, it has 100% stock holdings with 0 bond holdings. The top holdings represent over 40% of total assets. Some of the top holdings of this ETF include Qualcomm Incorporated, BlackRock Incorporated, Texas Instruments Incorporated, United Parcel Service Incorporated, Class B, Pfizer Incorporated, PepsiCo Incorporated, 3M Corporation, Coca-Cola Corporation, Verizon Communications Incorporation, and International Business Machines Corporation. You might also want to know that SCHD's 3-year return is 17.69%, while its 5-year return is 16.3%. A report published by US News states that you can earn a quarterly dividend of $0.59 per share. The 3 largest holdings of this ETF include IBM, Home Depot, and Pfizer. Well, IBM has one of the best dividends on the market with a yield of 4.4%. On the other hand, Home Depot offers a 2% yield and Pfizer has a yield of 3.9%. According to a report published by The Motley Fool on June 19th of this year, the Schwab US Dividend Equity ETF has a yield of about 2.9%, which is certainly higher than the average yield of the S&P 500, which is about half that. And because this is a concentrated pool of just blue chip companies, the yield has been steadily over the years, ranging from about 2.6% to 3.3% annually over the last 8 years or so, but typically right in that 2.9% area. With that being said, let's talk about our next dividend-paying ETF. The Vanguard Total Stock Market Index Fund ETF tracks the performance of the CRSP US Total Market Index. Interestingly, this ETF has returned 8.86% since its inception back in the year 2001. VTI is a market capitalization weighted index that measures the entire investable US equity market. It includes small, mid, and large cap companies. The VTI ETF is managed in a passive manner and uses an index sampling strategy. I would say that the diversified holdings and market-beating total returns of this ETF make it a fantastic long-term investment. According to a report published by Seeking Alpha on August 30th of this year, VTI's underlying index is quite broad with comparatively few inclusion criteria and with no set number of holdings. VTI's underlying index results in an incredibly well-diversified fund with just under 4,000 holdings and with exposure to all relevant industry groups. The diversified holdings of VTI reduce portfolio risk and volatility, and the annual returns of this ETF have averaged 8.9% since inception. While the performance of this dividend ETF is accelerating, with VTI posting double-digit annual returns for the last 10 years. According to management data, the underlying holdings of this ETF have an earnings yield of 4.1% and an earnings growth rate of 18.8%. You can definitely expect significant shareholder returns if these results are maintained. At the moment of making this video, the price of VTI shares was $221.73. Lastly, we have QYLD, which is basically a passively managed ETF that boasts a near 1% monthly dividend. This makes it one of the highest yielding ETFs on the market. It holds Nasdaq 100 stocks and sells calls on those stocks. Well, the strategy behind QYLD is to sell covered calls on its underlying holdings, which limits its upside, while paying the premium received as dividends after expenses. At the moment of making this video, it was trading at $21.71 per share with a 52-week range of $20.51 and $23.58. The expense ratio is 0.6% and the YTD daily total return is 6.57%. During the last 5 years, this ETF has returned a modest but positive 1.18% compound annual appreciation and a dividend averaging 10% per year. The best thing about QYLD is that this ETF deals with high-quality Nasdaq 100 stocks that have appreciated nearly 221% over the last 5 years. Moreover, reports suggest that this ETF has outperformed high-yield companies such as AT&T during the last 5 years. In simple words, when it comes to dividend stocks, there are few options better than QYLD. So, what do you think? Should a person invest in these dividend ETFs? And is there any other dividend-paying ETF that should have been added to this list? If so, let us know in the comment section below. So that would be all for our today's video, and thanks for watching it. So like, subscribe, click the bell icon, you know what to do. And while you're here, click to watch one of these 2 videos that are currently appearing on your screen. We'll see you there. Take care, stay tuned.